Welcome to another day in the Matrix. This is Red Pill Podcast 144, and this will be our New Year's Eve special combined with What I'm Investing in Part 2 special. So this will be a really jam-packed episode for you all today. I hope you're all having an amazing New Year's Eve wherever you are, whether you're celebrating it or not. Chief Wolf says much love to you and your family. And it was great for me to be able to squeeze this one in today. Even though it was a holiday, I wanted to get this one out there because of the timing of everything that's happening in these markets. And like I said, I have a very special podcast for you all today. I put in a lot of work into this one, and I know this will be the right way to wrap up the year before moving into 2024. But before we get started, I just wanted to start out with gratitude and let you all know that I am so grateful to be here with all of you, building together to be a part of your journey. 2024 is going to be such a powerful year for the Wolfpack. I could already feel it, and I'm grateful for every single one of you. And I can't wait to see all the things we're going to accomplish in 2024. And since today will be a part 2 of Red Pill Podcast 138, some of you might remember that was the What I'm Investing in special. That means for next week, we'll be back in the normal swing of things. So make sure to vote in the comments section below this Patreon post of this Red Pill Podcast with the altcoin that you'd like me to cover in next week's Red Pill Podcast. This way, we can get back on track. But before you do that, please listen to this next part because it's important. So I came up with a new idea. Moving forward for these podcasts, we really want to avoid the same coins being voted on over and over again. And that's why starting now, I will have a list of projects that I'm currently or personally investing in. And this will be an ongoing series where maybe once every 2 to 3 months, I'll go over this list of projects in that Red Pill podcast. That way it will be what I'm investing in part 3, part 4, etc. And we'll make that a series from now on. And that list of coins I'll be going over, which will be the same coins we go over today, will be Hedera, HBAR, Polygon, Matic, Chainlink, Cardano, Theta, Theta Fuel, VeChain, as well as VThor token, Aave, Cosmos, Polkadot, Zilliqa, IOTA, and Stellar Lumens. Of course, we also go over Bitcoin, Ethereum, and XRP in every podcast. So there's no need to vote on those coins I just listed. No need to vote on them anymore moving forward because I will cover them more regularly. And the next time I intend to cover this same list of projects that I just read out will be in most likely Red Pill Podcast 155, since that's the week before the lunar eclipse, and that's just perfect timing. Gives us a little over 2 months to collect more data in the charts between now and then, and it will hopefully free up the votes in future Red Pill podcasts to go over projects that we typically don't talk about so often. So I think this is a really good strategy for 2024 and moving forward to bring the most value to this Red Pill podcast and our community. So I just listed off 14 different altcoins. Please don't vote on any of those this week or moving forward because I'll be covering them essentially every 2.5 months from now on. I'll make sure to let the mods know about this as well. And I'm aware it might take some getting used to because this is a new change, a new update. But if you ever forget the list, I will be posting this tomorrow, hopefully just in a text post for the new year, labeling all the coins inside of Patreon, as well as you can always go over to the What I'm Buying or Selling tab inside of our Discord under the WatersAbove Updates category. That's near the top of our Discord server. And also, if you are new here to the Wolfpack, welcome. It's so great to have you here with us. Happy New Year's. And if you haven't gotten access to our Discord server yet, go ahead and send me a direct message on Patreon with your Discord username, and I will get back to you about our Discord in a Patreon message. So please do not comment below. That's not how that works. The instructions are very clear. Don't email me with your Discord information. Don't comment it below this podcast. Please, you need to direct message me here on Patreon. It's very important. And if you can't figure out how to DM me, it's very simple. You could go into YouTube or even Google how to direct message a creator on Patreon. So without any further ado, I wanted to kick this off by sharing that today's daily close is arguably one of the most important daily closes in Bitcoin's history. It has a very rare alignment in the charts, being that it's not only a yearly candle close today, but it also happens to be the closure of a 4-month candle, quarterly 3-month candle, bi-monthly 2-month candle, of course the monthly candle as well. Then it's the bi-weekly close, of course the weekly close. Now I'm not finished. It also coincidentally happens to be the 5-day close, the 3-day close, and the 2-day candle close, all in one day. So for those of you that are not technical analysts or are just getting used to the charts, it seems like a very rare alignment to have 10 macro candle closures landing on a single day. Of course, it's naturally New Year's, so a lot of those more macro candles are going to line up that way anyways, but I just think this is pretty powerful because usually you'd at least see the bi-weekly or the weekly candle sort of throw this all off. Sometimes a 2-day candle might throw that off. So just something to bring up to kick off today's New Year's Eve special for the Red Pill podcast. Also, funny side note, and I'm sure some of you may be aware of this already, that if you take today's date written as 12/31/23, which is a very common way to write the date, especially here in the States. Of course, if you live internationally, you'd be putting that 31 in front of the 12. But needless to say, if you were to remove those slashes, you're going to end up with 123, 123. So funny how the numbers work, but I just wanted to point that out. So getting back to today's podcast, we've effectively moved through this recent full moon just a couple of days ago. It's about 5 days out now. So for those that are new here, we look at this lunar phases and 5-day cycles typically. So 5 days before to 5 days after is the window of time around the lunar cycle that we're focusing on. And this gives us a little bit of wiggle room. And to make this all nice and simple, if you have a full moon, typically those are your microcycle lows, and your new moons are typically your microcycle highs. This means that after you leave a full moon, you go up into the new moon. And as you leave a new moon, you typically trade down into the full moon. And this is a cyclical pattern that we've recognized here on the charts. And it's been very helpful in our overall investment thesis. It's also been helpful for swing traders. Now, because we've moved through the full moon, I believe it was on the 26th of December, we're getting to that 5-day window. This is putting us into the quarter moon, and now we're heading out and we're heading into this new moon. Another thing to mention about tomorrow is that Mercury will be stationing direct. So we know back a couple weeks ago, I talked a lot about the Mercury retrograde effect on Bitcoin's chart, and we nailed the move up that it had on the exact date range we were anticipating it to happen. So that was really cool to see, because there now is, without a shadow of a doubt, an influence on the way Bitcoin behaves during Mercury retrograde. And what I've come to terms with is that it's typically neutral from start to finish. And here we are today. If I was to load up the charts and show you where we're at on a daily chart, for instance, looking at Mercury retrograde analysis, I'm going to show you really quickly. We have this being the start of Mercury retrograde, where effectively we're at 42,870, and then here we are today with Bitcoin within 1% of where we started. And what I was saying earlier is about how we get to this like 5 to 7 day mark up into the start of Mercury retrograde, and Bitcoin has a move up. and it's typically a fake out. So what we talked about two key points to consider, one of which was how 5 to 7 days into Mercury retrograde, we tend to go up, and then it's a fake out, we go down. And another thing we talked about is the neutral effect of Mercury retrograde. We get that more often than the other way around. So it's typical to see us close flat from the day Mercury stations retrograde till the day Mercury stations direct again. It's really fascinating stuff. And to see this sort of thing happening over and over again, these sort of neutral patterns here, you could see neutral. This was one of your anomalies. This, you can see obvious neutral here, very neutral. This is even actually pretty mind-blowing because we had a correction in the time frame Mercury retrograde. We got bought right back up to the end of it, neutral. Here, neutral from start to finish. Here was one of your up cycles, and here, neutral. And what's really cool about this is if you're not neutral, we tend to go up. So this is telling me that on our next Mercury retrograde, it's going to be a pretty powerful time for Bitcoin because we not only have Mercury station retrograde, but we have Satoshi's birthday, we have the next solar eclipse, we have the April 15th event that I have already shared in my work that I believe will be a powerful event that happens on the world stage or ritual. I don't want to get too ahead of myself. We're only 11 minutes into today's podcast, but you guys know how this goes. This is a lot of information, and I do my best to give you to simplify it all. And based on what we've seen with Mercury retrograde, it's really powerful now how many of these iterations are doing the same thing over and over again. And once we lock in on those patterns, we have to pay attention to them. We have to use that as a part of our analysis because it is as powerful as doing something like technical analysis. All right, so we effectively had our full moon, and now we're heading to the new moon in about 11 days. So we're going to be putting in the new moon date, the 11th of January. All right, so what's really powerful about this date of January 11th, naturally the 11th day of the year, of course, in the Gregorian year, and it will be an 11-date numerology. Now, I want to sync this up with the upcoming Chinese Lunar New Year, which is going to be on the 10th of February. And you can see that it also has an 11-date numerology, including the end date. These are 31 days apart, which is the 11th prime number. It's powerful stuff. So from your 111 date, you have it being the 11th day of the year, obviously. But then having the 11-date numerology is special. And then tying it to Chinese New Year, the following new moon after this new moon, sharing the 11-date numerology, and then you have it being exactly 31 days apart, 31 being your 11th prime, in the 111 code. Also, another thing to mention, and we're going to talk about this in a little bit, about how our months are all discombobulated when we use the Gregorian system. So please be aware that this is not the actual New Year tomorrow. The real New Year would have more to do with the vernal equinox than it would to have to do with January 1st. So springtime. The transition of timing leading into spring. Now, I'm not here to debate this because it would have to go into many other directions, and it's not to say that things are wrong or that celebrating today is wrong. That's not it. Have fun, be playful with life, but just be aware that this Gregorian calendar was implemented and strategically designed to have all of us be celebrating on pagan ritualistic black magic holidays, unholy days, actually. There's nothing that you need to worry about with what I'm saying. It's just we're here to spread awareness and truth. That's it. It's when you're unconscious to all of this and you take it so seriously is where it starts to kind of degrade the soul. So we're having the best time of our lives here. You know, there's no reason to get into the truth and then have it become this negative thing. It's about awareness and staying neutral in the process. I hope you all feel where I'm coming from with this. So It's happened to me now several times where people have reached out and been like, I don't know if you celebrate today, but just wanted to let you know Happy New Year. And what they fail to realize is just them reaching out to tell me anything means a lot to me. I just love humanity, connecting with people, and to know that somebody cares about me enough that they thought about me to share that. That's what has value, whatever day of the week that happens to land on. So I appreciate and I love and I'm very grateful for all of you. You know, never feel worried about any of that stuff, even though we're highly aware of what's going on here with the calendrical system, with the calendars, and what they're here to do, and the fact that we're here decoding them. That's really what's the most powerful thing to all of this, is that we're a community of people that see through this charade, but we're not going to let it get the best of us. If anything, we're using it and tapping into it to be inspired, to do better, to be better, to bring expansion to this realm. So just a couple things that I pointed out, and we're going to be breaking this down a little bit more esoterically. I just think that this 11 code tied to this upcoming new moon is definitely giving me some things to consider for my overall analysis. And then these connections to the Chinese New Year, Year of the Dragon. And because we pointed out this number 31, we need to point out the dragon, with this being 31 in reversible reduction. You also have over here reverse ordinal 103. So when you take the mirror of 31, you have 13. This is your 13. You remove the 0 in the rules of numerology, you're right back there. So powerful stuff. This is syncing together, not only with the dates, but with Chinese zodiac and the gematria, adding in another layer, trying to keep this simple still. Now, all these 11 connections tied to this month of January is important because this is actually the true 11th month in the cycle. Remember October, octagon, 8-sided. Novem is 9, Deci or December, Deci is 10. Well, January for Janus is 11. It's 2 pillars, 2 faces, 2 sides. This is your Yakin and Boaz. So all these 11 connections tied to this month of January is incredible. It's right there in our faces. This is the true 11th month in the cycle. And actually, I'm going to make some statements in a little bit that might confuse some people, but let's remind ourselves that it's not months, it's moons. There's 13 moons in a year. That's why using the Hebrew calendar is very important in seeing deeper into what's going on here. So, and I can't wait to get into all this stuff in my decoding mastermind. I'm really excited. I have a lot of notes that I've been taking here and there since I've been developing it that have, just simplified tutorials of a lot of this stuff so that you can walk away from shorter videos within this grandiose project I'm about to release and just have, just sharpen the tools that we've been given here and we've been almost forgot that we have. It's fascinating how intuitive this decoding process becomes once we wipe away some of that cosmic amnesia. I wanted to bring up something about this end of Jubilee that we went through last year. We haven't talked about this in a while, but I do want to talk about it for a moment. And this is tied into that 11 code that we were just speaking on a little bit ago, and the 111 connections that we're going to be getting between September 15th, 16th, 17th, and 18th, because we had Rosh Hashanah was the 15th through 17th, and then on the 18th was the last day of Jubilee. All right. If you're new here, and this is a little bit much for you, take a moment, maybe go rewatch my Year of the Rabbit Decoded to prepare you for the upcoming Year of the Dragon Decoded, and then also take a look at any content that I released, like full-length decodes. Those could be very helpful. We decoded the Jubilee consistently throughout this year. It'll fill you in on everything, and that would be decodes that were before September. Okay, so just wanted to get back to this 111 connection, 111 code, and taking from the 15th, it would lock you in on the 3rd of January. So I think that's pretty interesting that if you go from that day up to the 18th, you would have 111 connections until January 6th. And then if you didn't include the end date, that would give you the 7th. So consider the 3rd through the 7th as all having these 111 connections with the end of Jubilee. And remember, we were talking about New York having this 111 code and the Jubilee tied to that flood ritual that happened in New York City. And it happened during Ripple's, what was it called, the proper party or something like this? That was insane to have that well, I don't like using this word, to have that insight that we were looking for a flood ritual, a water ritual in DC or New York City, and it happened. It's pretty wild. Out of all the places in the world that could have had that at that exact moment, it was within that, distance. It's pretty incredible. And it wasn't just New York State, it was literally New York City. All right. So want to share as much as I can today about some of these date connections that we're leading into. We have talked about the Jubilee connections in these 111s. Remember 9/11, which happened in New York City. September 11th is on the day that leaves 111 days left in the year. So you can't disregard this 111 code. It's very powerful. And New York being the home of the New York Stock Exchange, this is the bull. Could tie this back to Taurus and some future decodes that we'll get into, but for now, this was just one thing to consider for the first week of this year, tied to the important date of Rosh Hashanah back in this September time of this year. And that was what ended Jubilee, a very rare 50-year cycle. I mean, you might only live through one in your lifetime. So we just lived through one. It's big stuff. And we see what the markets did in response to that. We see the war narrative ramp up right when the Jubilee was over, a couple weeks later. And when I was decoding this, I just remembered that Bitcoin's ledger officially started on January 3rd of 2009. So consider these early January connections, all right? That would make this upcoming January 3rd the 15th anniversary of the Bitcoin ledger. And let me show you this real quick. January 3rd of 2009 landed on a 15 date numerology. So you have a 15 date numerology, and then we're talking about the 15th anniversary. And that 15 is a mirror. We also have the 51, and the number 15 and 51 are tied directly to finances, economics, money, fiat, war. I mean, it's pretty wild. Specifically, finance is tied to the war machine, tied to Aries and Mars. I talked about this a lot 2 years ago, very often in public YouTube videos. But anyways, we have this date of the initial release of Bitcoin, which is also on January 9th. All right. So that's perfect because that's right in that time frame, 15-year anniversary. And it's in alignment with this upcoming new moon that we've been decoding. Last thing to say about all of this is that January 9th of 2024 tied to Satoshi Nakamoto's last birthday by 9 months and 5 days. And this is a little bit esoteric, but this 9/5 we're seeing in Satoshi's last birthday being on the 95th day of the year. So that's just one thing for us to bring up, and then connecting it to the next birthday. We have to consider that this will be Satoshi. And now, again, Satoshi is mythology. This isn't a real person. But this mythology, this mythological character of Satoshi will be turning 49, which is 7 squared. 7 times 7, 49, which is a Shemitah year cycle. That leads to what we would call Jubilee on the 50th year. And I believe this needs to be considered for Bitcoin, since Jubilee can be a very positive thing for those who are paying attention, like we are here. So you heard it here first. Satoshi will be in its 49th year from April 5th, 2024 to April 5th, 2025. And then from April 5th, 2025 to April 5th, 2026 is the Jubilee year. This is actually planting the seed for me consciously on what could be I don't want to say super cycle because Bitcoin is in a forever bull run. It's never broken out of bullish structure ever. So when we say super cycle, we have to be kind of specific, and everybody here might have other analysts that they listen to who have their own nomenclature, and I don't want to confuse people, but I guess the best way to explain this is we might have a double cycle. We might have like a two round cycle like we had over here in 2012. I don't want to get people excited, but let me show you what I'm saying here. And this is definitely me getting ahead of myself, so I have to stop now. Because then people are going to do the same thing they've been doing to me with the whole $1 XRP thing. It's like, when did I ever say XRP was going to go to $1 before the end of the year? Did I say that? Or did I show people a fractal that's been playing out over and over again, and that it's showing the new moon of January? But it's like, I don't know what's going on with humanity. They read titles, don't listen. Maybe it's something to do with attention span. Yeah, I don't know. Anyways, I don't take offense to it because I know the real ones know, and they're paying attention, and they're actually investing their attention into developing skills. And they're not just sitting around reliant on me. That was never the way here anyways. That's not what this wolf pack is about. So what I'm talking about over here, about this Satoshi Jubilee, it might have a lot to do with not only the last year of the dragon, but the fact that it's aligning with this birthday of the mythological character. And if we're saying Satoshi, that's Saturn, and we're talking about a Saturnian calendrical event, like it's a cyclical event based on calendrics, and we're directly tied back to the mythology of that in blockchain. This is big stuff. I'm not just making this up out of nowhere. There's a lot that goes into explaining this. But if you've been following along this work here, hopefully you're open-minded enough to see where I'm coming from. And this is not weird if we were to have some sort of event like this. And again, we're talking about Bitcoin. We're not talking about every altcoin under the sun. We're talking about specifically Bitcoin. And I do want to remind you that when Bitcoin peaked here in the first part of this cycle, it immediately got met with an 80% correction and then a mid-cycle correction of 75%. So those of you that know Wyckoff method, you're going to know what's going on here. We have buying climax, selling climax, automatic rally, V-shaped spring, your test, really arduous test after a V-shaped recovery. Then you have SOS backup phase and continuation. This was one of the cleanest Wyckoff examples of all time. But were you ready for an 80% drop within a week? Probably not. So this is the shit that, what we're doing here is so special because we have all this insight and awareness, and we're going to be here collaborating together, not getting shaken out in this process. But if Bitcoin wants to do something like this, I shouldn't even say that. I could say that I'm open-minded to something like this happening, where we have two cycles. And this affected XRP, by the way. And I've shared some theories into XRP for 2024 and 2025 about $25. And that $25 upside target of the extreme in the range, I do think you would need to have two pulses to make that happen. Maybe a pulse to 8, chill out, retest the prior all-time high at $3, and then go up. But look at the timing in between. It's going to take almost a full year. It's catching this wave that's going to feel really epic. Then the sell-off is going to be like, all the people that hate on XRP are going to be like, okay, you're going to zero. Then it's going to take some time to build a range. Smart people will be accumulating, but the smartest people were accumulating now. When XRP is 60 cents, why wait till it goes up to 8, corrects to 2, and then stays sideways between $3 for fucking a year when you could have been buying when it was boring? Buy when it's boring. Don't buy when it's excited. Don't do what everyone's doing on Solana right now. Learn from everyone's mistakes so that you don't need to make them yourself. Anyways, getting back to this. Hope you guys are enjoying today's podcast. We're kind of filling in all the philosophical gaps of the future, like we have our crystal ball handy with us today. All right, let me get to A couple of things to denote about where we're at in the astrology. So we are effectively in sidereal Sagittarius right now. We're going to consider the sidereal system over the tropical because sidereal is actually following what the sky is doing. It's more in astronomy rather than just tropical fixed system going off of these dates since the dawn of time. This is, I don't want to say more legit, but it's definitely more intriguing to me and has been more powerful in my decoding system. And I wanted to point out how we have Sagittarius giving us this 144 in the code, and here we are today, Red Pill Podcast 144. And we'll be in sidereal Sagittarius until the 14th of January, which is pushing through the dates that we've been decoding, specifically January 11th. And that would be, I'm gonna go even more esoteric here. I hope this is making sense to people, but I talk often about this starting the zodiac count on Pisces. So Pisces would be the true first sign, or you could even zero it out if you wanted to. But I like to look at 13 sign sidereal, so looking at the sidereal dates, but including in Ophiuchus. And this would make Sagittarius your 11th sign if you were to do that. Now here it's going to tell you it's the 9th sign, because it's not including Ophiuchus, and it's starting with Aries. Now, I don't really care what number it is, but I like that alignment between Sagittarius being the true 11th sign, and then this going through the month of January, which is the 11th month, as I shared earlier. So this is why I analyzed this system this way. It's allowed me to make sense of all of this instead of just blindly following the normal calendar or even the basic teachings of astrology. There's always more to uncover, and this is why learning the skill of decoding unlocks deeper truths. So yeah, I'm really stoked to get this new Decoding Mastermind course out there because I believe it's going to bring that utility to everyone who takes part in it. It's going to be very interactive. I'm in my process right now of just wrapping up like the first round of masterclasses that'll be released. So I'm hoping to get a release date soon. And yeah, all of you here that are signing up, you're getting not only your Patreon discount, but on top of that, you're getting an initial launch price. So like a pre-sale price and access to it early access. So stoked to release that. I need to focus on that. And then once I have that out, I will also have the Year of the Dragon decoded available. And we're just starting off the new year with like a floodgate of data and gnosis. So getting back to Sagittarius, the 11th sign, if starting with Pisces and including Ophiuchus, we have January being the 11th month in the system. And we also have Sagittarius ruled by Jupiter. And this is where I'll finish off on this. Sagittarius ruled by Jupiter, and we're moving into the year of 2024. And we have the Hebrew year of 5,784. That adds up to 24. And then we have the Jupiter zodiac symbol. Sorry, I'm looking over my microphone to type this out. It's not the most fun. But you could see that 24 in the Jupiter zodiac symbol. So this is a year of Jupiter in a sense. And I want us to consider that. Also with the fact that Jupiter or Zeus has this lightning bolt or thunderbolt, fire from the sky symbol. And that would be also tied to the year of the dragon. Dragon breathes fire. So consider that with your decoding of altcoins. Whatever coins have that fire symbol or fire symbolism, definitely pay attention. It's powerful stuff. And you need air to have fire. Consider your elements. Have fun with that stuff, guys, because I think it will make you more powerful decoders if you think of things just the way nature works. And all of these mythologies are coming back to nature and the human body, the human mind, the human experience. It's not actually this externalized godly thing. There's no such thing as that externalized godly thing. That was a distraction. That's to take you away from knowing thyself, from knowing thy truth. I know that might shake some people up, but this is the Red Pill Podcast, and you're here to take that pill It's a tough pill to swallow, but it's the pill that sets you free. So, all right, we should move on. I wanted to talk about a couple more things with Bitcoin's seasonality chart. We haven't looked at this in a minute. And we can see that Bitcoin seasonality showing about 11% gains on average in January. So that's something to consider. And we're really dialing it in right now, looking at January. Everything I said before about Sagittarius tied to Jupiter and all, it's really just looking at this next month, with a lens, because we've talked a lot about the month of April. We've talked a lot about this month of April, and we are all right now trying to figure out what is the next big move to either de-risk or to then start reaccumulating. For those that are brand new to this market, maybe you're wondering when to get started, right? So that's what we're deciphering right now, and I'll keep you updated every step of the way, but please take notes during these Red Pill podcasts, because a lot of these little gems are just randomly coming out of me, out of nowhere. You got to take notes. So we do have some positive data for the month of January for Bitcoin. We also have over here this data that shows on presidential election years. And I want you all to pay attention to this because we are in an election year. We see that January is a slight loss in election years, but it's only a slight loss. And in most years since pretty much the invention of the Dow Jones, we are looking pretty damn good. About almost a full % up. Now, note that we have a new moon starting the month, and we have a full moon near the end. So I would not be surprised if the stock market did have a red month by the end of January, because we've been pumping the whole time. So it would not be weird to me if the market was fulfilling some of those targets that I shared in the last Red Pill podcast. For instance, we go up to this 1618 and then we pivot there, and that could be completed this month. Maybe even if we went a little bit higher, like to 38,000, and then actually still closed below where we just closed, where we're opening the month. I hope this makes sense. Basically, at the beginning of the month, up into the new moon, maybe we have a little bit more bullish, and then we pause. We saw this same thing actually happen back in 2022, the prior all-time high. It was right there at January 6th we topped out. And then this led to a pretty noticeable correction, about 10% instant correction. So look at how we've been on a tear lately. This shit can't just keep going up forever. It would make a lot of sense to me if we went up a little bit more into January, but then closed red, maybe even on a pretty dramatic pullback, and then had a pretty good February, March. And remember, I've already shared my thoughts on this about how late March and early April during a year of the dragon are typically bullish. So the fact that this is showing red in the election year and then red in May, that does not surprise me. So where does WatersAbove think he'll be taking his last minute buying opportunities? We keep saying last minute, and really what we're trying to say is, how do we maximize ROI by getting in at opportunistic times, right? That's what we really mean here. So I will absolutely be taking advantage of this time frame of April, May, June, if we're going to get the market that I have planned out. I have my investment thesis. I'm going to trade my plan. I never go against my plan. That's one thing that you learn as you become a more sophisticated investor. You always you put in all this hard work to develop your plan. Why go against it? And a lot of the time, the reason people fail in this market, why they don't take any profits, or they always are selling at a loss, is because they never trade their plan. Some people do bust their asses to develop such a great plan, step by step, very strategic, and then they just don't execute. Their emotions get in the way. So don't let that happen to you. Don't let that happen to you. Keep to your plan. As long as your plan is showing returns, it's the greed that a lot of people deal with. They're projecting a move on one particular chart that's going to be 80% up, and that's not enough for them because they're getting distracted by another project that's up 700%, and then they FOMO in that thing, and then they never sell the other thing that they already had the TA set to sell. A rinse repeat keeps going and going and going. So you got to stay in your lane, family. Don't get distracted. Words of wisdom, trust me. All right, so this aligns a lot with things that we've been talking about, how we have a March lunar eclipse and then we have that early April solar eclipse. I think that's powerful stuff, showing you losses in the stock market on these red or presidential election months leading into the election. All right, we're going to be going over to this last tab, which shows us another thing that I think is pretty cool. So no matter who wins here, whether it's a Republican or a Democrat, we see that all election years, for the most part, end positive, with exceptions. And the exception would be the Black Swan event that happened in 2008. I'm sorry if this is cut off, guys. I'm going to try to lift it up a little bit for you. So we have this Black Swan event in 2008 that was effectively a Shemitah year. The subprime mortgage crisis, of course, during a Shemitah. Then you have this year right here in the red, or closing below, losses in an election year. The year of 2000, that was the dot-com bubble. That was also during a Shemitah. And right here, the 1 month that you're going to see that we're pretty much neutral, had very little gains, 1960, an election year. Right after a Shemitah, and remember what I teach, it's the year after a Shemitah that we typically see our lows in the cycle. So that's why we're so ahead of the rest here, because we know the esoteric reason why these things happen. Shemitah years tend to be not only your all-time highs, but some of your largest corrections, your largest bear market sell-offs, also changes of power, like wars starting, all sorts of craziness. They also ritualize right after Jubilee's end, or Shemitah's end. That's been proven in this Jubilee cycle as well. We also had one back in the 70s, what was going on with Nixon. And then you could keep going as far as you can provably or reasonably trust the data of the so-called his story. All right, so this cycle we're in now, there is no Shemitah. All right, that's why I think it's important to talk about how I'm not going to entertain losses in this particular year. We're not in Shemitah, and all the iterations of this, we had a Shemitah situation. We don't have another Shemitah until 2028 through 2029. So, of course, that will affect the next election in 2028, but that's not important right now. So it's likely whenever we close for the stock market into this yearly close, we can anticipate closing off 2024. So we're a year out right now. We could consider closing at least 10% higher than wherever we close this year. All right, take note of this. We have 11 out of 18 of these election years tracked with over 10% returns above this dotted line that's going across the screen. So this is pretty powerful. Since 2020 closed, with a gain of 16%, that's another cycle where we've been up that much. So if we were to entertain that this year of 2024, which we're just getting started right now, will be up 10% from where the S&P is at right now, that would have S&P closing over 5,000 points in the next year. 61% of the time in what we're looking at right now, we have over 10% returns. And if you removed the 3 iterations of these Shemitah years that we talked about earlier, that'd be 73% of the time. So it's wild to be aware of this a year in advance. And one thing I find interesting is if you counted on this chart the red bars versus the blue bars and considered the 2020 bar would be red and the 2024 bar would be blue. This gives us total of 20 elections, literally 10 each. So this upcoming election will be a tiebreaker. Yeah, who will win the Royal Rumble? Anyways, I think like before this election was FDR and he was president for like 20 fucking cycles in a row. So he was the one guy that got 3 terms, I believe. Anyways, jokes aside, it's just amazing that we could project this sort of stuff in advance. And this tells me that if the stock market's going to be bullish already, as it's already bullish by the end of the year, keep that in mind. And the election's all the way in November. So we're like 11 months out as I'm recording this. yeah, this gives us a whole year to be essentially feeling pretty damn good about the markets, and that would be bullish for crypto. So now is the perfect time to get into the charts and review what's going on. I'm going to start with Bitcoin. This Dow Jones chart looks unbelievable when you look at the straight line breakout. Okay, we're looking at Bitcoin. We're going to start things off with the yearly candles because we're about to make a yearly close, and we have 157% gains. So effectively outperformed Ethereum, which had 90% gains, and XRP, which had 82% gains. So that's pretty big. Let me check Binance. That's another bigger project. 27% gains on the year. Doge, 28% gains on the year. I know Solana is going to be insane. 1,000%. Yeah, unbelievable. But pretty impressive for Bitcoin to be outperforming all of these large cap coins on the yearly close. From year start to year end, it's pretty much been green the whole time. So it's crazy when you zoom out, right? Because if we went to the end of last year, it felt totally different in this market, remember? Look, we're going to be on the daily candles, and we're going back a year ago. This was December of 2022. Bitcoin was trading at $16,000. You know how much negativity was in this space? How many people were giving up and thinking that this was it? And you zoom out now a year later and look at how much things can change. Bitcoin's up over 150% on the year, and it's the largest market cap project. So getting back to the patterning here, we have this one red candle followed by three greens, one red candle followed by three greens. So we are on our first green of two greens ahead. And it seems to be that the second green is what starts breaking all-time highs, and the third green is when shit gets wild. So welcome to another year in the Matrix, family. We're just getting started. It's very fun. When you're aware of it, you know, it's dope. Whether you're in Bitcoin or not, Bitcoin is the compass of this market. So you could position yourself on any pivots of Bitcoin and for the most part be pretty damn accurate. All right. So yearly, there's not going to be too much to talk about because we're still just keeping on course. Let me turn up the 3-month because that was phenomenal. So we'll be closing above the 8 simple moving average on the 12-month, on the 3-month, and we're holding a bullish posture on all of our EMAs. They're all sloping to the upside, so this looks really damn good. Very much an automatic rally vibe, though. Let's go to the 2-month, the bi-monthly candles. We're starting to see this 8 sloping to the upside, looking great. We're above all of our moving averages, so the bi-monthly is looking really nice. I'm going to be pulling up the monthly now because that's what we're about to close on the typical data that we review. Let's look at the Bollinger Bands. All right, so I know this is kind of weird, but if you just zoom in and adjust slightly, you could kind of get an idea of where we are on the Bollinger Bands. And we need to talk about this, family. Like, I don't know how many people are talking about this right now because I don't watch any analysts. I am 100% working on my art, and I'm almost consuming nothing unless it's new music that comes out. And we're about to close above this topside Bollinger Band. So this is probably news to a lot of people on the monthly. When we get this closure, it's looking pretty good typically afterwards. We do have this fake out over here. Now, what was this fake out? This was the one that we had that was the top of our automatic rally back in 2016. So that's huge, right? Look at what we gravitated back to, the 8 simple moving average on the monthly. Here, your automatic rally stopped out at the topside Bollinger Band, and then it started getting wild once you were closing above it. So right now we're closing above it, and I suspect, I'm going on a whim here to say that I do not think Bitcoin's just going to go parabolic right now. That would be rare, but who knows, man. With this ETF shit, it's a big reason why I wanted to position myself in the earlier half of 2023 with Bitcoin. And I told everyone that after Bitcoin was at 25,000, I'm done with my accumulations. I might sell if it gets to 47 or 48. I might, but I don't really care anymore about the Bitcoin play. It's more just long-term from here. I'm more interested in the altcoins right now. I believe most of you probably are as well. So yeah, I don't think Bitcoin's on its way up to this parabolic stage like you see here when we close above the top side Bollinger Band, because we do have this one piece of data that's clear and the timing of it is pretty similar, and where we're trading is also pretty similar, that even though we closed above the top side Bollinger Band, we did get back below it and traded on the 8. Right now, the 8 simple is sitting at 32K pretty much. So I do think 32K will be tested again, insinuating that a dip is to come. Let's look at the 2-week. 1 second. All right. So we're trading above this topside Bollinger Band every 2 weeks. Clean. Look at this. This is why it's important to check in on the Bollinger Bands on these macro timeframes. It could be very helpful. And another thing that we see that's powerful on Bitcoin is we had this wolf cross a couple of bi-weekly candles ago where the 8 got above the 55. Big. And now our, let me reset this. Our 13, 21, 34 have all effectively crossed above the 55 as well. And now we're in complete bullish posture on the bi-weekly candles. So you have the 8, 13, 21, 34, 55, and your 200s. This is looking beautiful. Seriously, this looks really good. And then I love how they're all coiling up right around 30K. So that kind of confirms what I was sharing before about a retest to 30K would not be weird to me. Let's look at the weekly. One of the things to mention, because we already talked about this daily analysis of the MACD cross. We talked about it maybe 3 weeks ago. First, we have the MACD cross to the downside on the daily, which happened back here. Then we have a daily close below the 21, which I was going to get to in a minute. Then we look to the 34 EMA. And then we start to really look to the 8 on the weekly. And if the 8 simple starts getting closes below, that would indicate weakness. So we're holding the 8 simple right now, still looking pretty good, which aligns with the idea that we could have a fake out pump, which could be ETF news related, exoteric stuff, and then just a big pullback. You know what I mean? Kind of a pump and dump. So that would not be weird to me if something like that happened. But I've spoken about this for like 4 months now. Ever since they started really pushing this end of the year Bitcoin ETF stuff. And then 2 months ago, I started making a lot more comments on it because of all these fake ETF, news leaks on Twitter and stuff. It was getting out of hand, So yeah, just consider right now with this AR automatic rally phase that closing below the 8 simple would be a sign that we're probably going to initiate the deeper pullback. All right, let's go to the 5-day. 5 days looking amazing. We just had the 34 cross above this 200, massive. We had this 55 above the 200 exponential, massive. Yeah, everything's bullish right now. Like we have seemingly topped out, but like when we're looking macro, when we're looking 6 months out, this is really good structure. Especially with this, and I'll keep hammering this in for everyone. We have the rejection at 25, a secondary rejection at 25, Black Swan event with March 10th of Silicon Valley Bank and many other banking institutions. Then we had retesting it as a support and then a confirmed retest, which lasted many weeks before breaking to higher highs. So holding a higher low structure, double test of what looked like a double top, confirming it as a support, and then the confirmed bounce. Very bullish structure. Solidifying, we're phasing into the part of the so-called bull run that will have a volatile shakeout. Let's put it like that. That kind of like maybe move up, big crash, or just out of nowhere crash. And I don't like using the word crash, but I think anyone who's looking at this from the standard like market sentiment from, these talking heads on mainstream media, they're going to call it a crash if Bitcoin comes down 30%. They're gonna. Like, that's just what they're going to do. You're going to see Twitter lighting up and everybody's saying the market crashed. But Bitcoin does 30% corrections all the time. And a 30% correction would just be back testing to prior resistance rejections. That'd be one of the most bullish corrections we can get, is a 30% correction. But they would call it a crash on mainstream media. That's just how they roll. So watch out for that word. It's a good word for us. It fuds out a lot of people, but it's very positive for the wolf pack. So 5 days looking good. Really nothing to say about this. Okay, now we're starting to see some problems on the 3-day. We're closing below the 8, and the 8 is sloping to the downside. So that's definitely a sign of weakness. This could also be bull flagging in a sense, but not the cleanest structure. Okay, now we have the 2-day, similar where we're holding on the 13. When you start closing 21, the 2-day 21 EMA below that, you definitely can start to get prepared for a slide. And now we have the daily. This is the analysis that I've already shared with you guys, talking about closing below the daily 21 EMA and then looking at what this 8 moving average starts to do in relationship to the 55 simple. So when we get that wolf cross of the 8 below the 55, that's downside implied, and we've seen some pretty big corrections to follow that. And as of today, the 55 is sitting at 40,000. It's going to creep up faster, and the 8 simple is sloping down at a faster speed, obviously, because it's a shorter term moving average, and that is going to start kissing that 55 soon. It could take maybe 3 weeks or less, but when that cross comes in, you see some pretty noticeable corrections. And let me show you, just so you don't have to like take my word for it. Let's go back to the 2012 cycle. Okay, here we are in 2012. Here's your automatic rally. Let me turn off everything except the 8 and the 55. So we'll make it nice and clean for you guys. You only have one thing to look at. All right, this is the end of your automatic rally phase. Right here was when the 8 crossed below the 55. That was the wolf cross with the downside implied. This led to your last correction before continuation into bull heaven. Another thing to note is when you got your wolf cross with upside implied, that was one of the best times to situate yourself, because look at how long we were sideways for. 50 days before it going up 200% over the next almost 3 months. And still, if you just held that range, you would have been in an incredible position when you really zoom out and look at this. To this phase, you have 5,000%, this phase 20,000%. So when you're in a solar cycle, you have all things considered in your relation to the eclipses, and you're positioning yourself in Bitcoin after these crosses, this critical cross that I taught everyone. It's one of the best places to be. So here you had the start of your solar cycle. Over here was your last cross of the 8 above the 55, and look at what this led to. Pretty noticeable. And now even if you bought over here of the first time it crossed, look at the comparison. It's negligible. It's the same amount. And then if we're talking about Bitcoin going into a new cycle, you would be zooming out looking at 26,000. Unbelievable. So I really like this cross, and I think on the daily, this is a sign that once we initiate it to the downside, we're probably going to have some slide. So this was your first example. I wanted to get back to this before moving on. You have the 8 below the 55, last correction, sideways. Then you have here, this was your automatic rally cycle in 2016. You can see the 8 going below the 55, really big correction that followed that. And then that was the lowest you were, and then a recovery once you had the 8 cross back above the 55. And then it stayed like that effectively for the remainder of the bull run. Over here, you have the same effect, but with a little bit more of an elusive pattern where you have the 8 crossing below the 55. Then you have a bull trap. So you can figure this out very quickly by just pulling a micro fib from here to here. And you know that your bull trap is anything rejected in the golden pocket. So that's clean. GTFO moment, basically. So let me go back and just show you that was a sign to get out. Turn this all off. Was this cross. Even if we did go up a little more, that was a sign. because what this led to was even deeper corrections and then eventually a black swan event. Okay, so let's finalize the idea of the larger correction in the event that we do not go any higher. I've already talked about this enough times, but we'll just speak on it one more time. If we were to have a deeper move, what I would like you to look at is the weekly 200 SMA. So we're going to turn these back on, and you're going to be looking at these green moving averages. So you have here at the end of the last bull run tested on the 200 simple. Here during the C19 crash, you went below it, but then you got bought back above. And here, once we effectively started closing back above it, we've been holding it as a support, this 200 EMA, 200 SMA combo. And where we're seeing those at today is around 27 to 30K. And I think that's important because if Bitcoin is to have a larger pullback and we were to measure from our current rejection levels at 44.4 and bring it down to a little bit below there, you're getting about a 40% correction. And we've talked about how we do see 40% corrections at the end of all of these automatic rallies. So let's be very direct here. I'm not saying Bitcoin cannot go below 27K on a deeper correction, but it's at least likely that if that does happen, it's going to get bought back up quickly. It could be happening all in a single week. If the correction is any deeper than 30K, it's going to be too volatile. It's going to liquidate a ton of people. That's what the New World Order wants. They want to take all of that cheap Bitcoin and then they'll keep it moving. But it's important that we look at some of these key moving averages to keep this in mind. Anything is possible in the matrix. I would love for a dip to 25K or lower. The market is not going to give me what I want. But if it happens, I'll be prepared. So anyways, we've entertained this idea of a 40% correction. It aligns very well with some of the technical supports that we have. And with April coming up, there's a lot of time between now and April. So in the next Red Pill podcast, we're going to focus on what could be like the play-by-play for Bitcoin moving forward. But for now, we're in a range, and that's why I can't say much more than I've already said on the shorter term analysis. As long as we're in a range, we're in a range. And I've been very often updating you guys about these CME gaps. We still have the one to the downside, and then we still have the one to the upside. The ones in the middle have been filled. So as long as we're in this range, there's really not more to say. We're just going to have to break the range eventually. And we have a couple of these trend lines to consider. We've been riding the support line, obviously, on the CME chart. On the Bitcoin Mercury retrograde analysis, we've had a break of this falling resistance, and we've back tested it effectively in alignment with the same trend line that you just saw on the CME chart. That's also looking very good. And then we do see after Mercury retrograde a little bit of bullish momentum. In some instances, though, we do come back to supports. So we're in the middle ground right now. There's not too much to say, but generally, all in all, Bitcoin is very bullish right now. It's on track. All right, Ethereum analysis is going to be quicker because although we did move up for a higher high and we got our yearly target, we got the 2,400 before the end of the year. So that was something I shared like 8 months ago. I shared that I was anticipating to see an 80 to 90 cent XRP. We got that in July during that moment after the SEC case. I de-risked, was very public about that, even on interviews. I also talked about a 40K Bitcoin before the end of this year. We got that. And a $2,400 ETH before the end of the year. So we've gotten all of our targets. We're moving into the new year. Things are looking really damn good. It's just how long can this bullish momentum last? Especially now that we've had Solana do what it's done. We've seen what happened with Kusama, with Avalanche. It's just getting too overheated. And ETH has already done enough. Bitcoin has even done enough, considering diminishing returns and diminishing gains cycle by cycle. So this is looking really good for ETH. It was cool to see another move up. And if we were to have one more move for Bitcoin, like we've entertained into like 47 or 48K, it would not shock me to see a $2,500 Ethereum to really just trap some bulls, and then I do suspect a liquidation event. But all in all, ETH also looking amazing throughout this so-called bear market. Really, really incredible higher lows and higher high structure, continuation pattern. Although still Bitcoin has been outperforming ETH. So ETH is looking like it's getting safer, not the craziest ROI potential, but still outperforming the stock market, of course. I mean, if you put your money in ETH instead of stocks, you did way better. So, but I mean, I think Apple probably outperformed Ethereum. Oh no, I take that back. Shit, stocks really do move like so sluggishly. Oh shit, Amazon got 80% on the year. This is cool to look at. Microsoft's probably, yeah, all right. Tesla up 100%, but they had a huge correction, so who cares? You know, like, I mean, shit right there. Ethereum outperforming most of the most speculative stocks, and some of the really big household name companies. So not shitting on ETH. You know, ETH had a great year in retrospect. I'm positioned in ETH enough now to not have to think about it much more. But yeah, on the TA side of things, there's really not much to update because it's still sort of in the same range as Bitcoin. It's up to Bitcoin to break the range. Now let's spend a little bit of time on XRP because we do have a pattern showing up. And first and foremost, we'll get to the fractal pattern in a moment. But what we have here is a nice setup where I have I need to talk about each trend line because it might be too noisy for you guys. But here we have a fib from swing high down to this swing low. And this data is showing you the yearly high when the SEC deemed XRP no longer a security. That was that peak. That's your buying climax. Here, it led to a very dramatic sell-off down to 43 cents. That is your selling climax. So BC and then SC. The reaction to that is an automatic rally. All right, so we've already effectively gotten there perfectly to the 702 on this swipe. Now we've had a pullback and we've back tested twice clean on the 382. What do I teach about the automatic rally? That we call it automatic rally after you break the 382. So there you go, boom, completed. Now back testing it is really solid. In the big picture, it would be weird for XRP to start trading below the 236 on this particular fib. Also, when you zoom out, you have this white trend line, which has been in play, and it's been on a lot of these touch points since the end of this bull cycle. This white trend line is holding, and it's been interacting for XRP since we broke out in this automatic rally. And if we were to retest that anytime soon, it would be putting us not only on a break of this horizontal support, but it would be putting us right back into the same range levels that we were trying to get out of. So XRP is really, really sluggish right now. Clearly no retail is stepping in on this thing. It's funny because I did some of the most investments in my whole portfolio on XRP. Every time it's been dipping below 60 cents, even recently, I've been accumulating some more. So we have this triangle pennant pattern, and it is in a bullish posture considering that we've had a breakout into this pattern. The resistances that we're getting are on the daily closes, and then on here on these wicks or tails to the downside. And we're effectively in breakout range, meaning that this is likely to break out very soon because of the distance to the apex of this pattern, and because it has a bullish bias, and because we're moving into a new moon, and also because this fractal shows us the breakout into this new moon time frame. That would be what's to be considered. So the next level to the upside would be the 0.5 fib in the macro. And then we have to see how XRP would interact with that level, because if it could clear the automatic rally, then you would have an SOS, and that would be getting you back to this range over here, somewhere about 80 to 90 cents, or where our highs were for July. Given the way that XRP moves though, if this is combined with some sort of narrative, then we can see it go straight to $1 pretty damn quickly. Does it hold $1? That's the next story. But I would like us to consider this pattern in the short term, and the way that we're coiling up in this structure followed by the overall Wyckoff schematic and the likelihood of having what is called a SOS, or a sign of strength, in alignment with this idea of this fractal that we pulled from this moment over here. Okay, so we've effectively had this first phase, and then we had that here, and then we had this dump phase. This was this. Then we had the recovery right here, which was just recently back in November. And then we have the last correction before just slowly moving to the upside before it pops. And if we look at today's chart and I turn off all the noise, you can see we're just slowly, no volume, no volatility at all, moving to the upside and holding all of our structure in general, higher lows, higher highs. So XRP is looking bullish. It's just feeling boring. And that's a tough place to be for a lot of newer investors. It's a great place to be for long-term investors who actually look at this as an opportunity. So that's about as good as we can get on the analysis right now. Another thing to entertain is we could be seeing a larger pattern at play right here of this. That would be a symmetrical triangle. Let me see if I have any chart that shows that. I want to delete all of this mess to try to show you what the hell I'm talking about. So it's this. This is really ugly though. I wouldn't even consider this shit, but I would consider this hold right there. And then we do have a big range to consider. Let me pull it there. Gets us to $1. I hate measured moves on like altcoins, especially charts like this, because they're so dramatic. But anyways, yeah, there you go. Like that's clear what's up. Now downside. Remember, this 54-cent level would be it. That would be really scary for a lot of traders, a lot of XRP investors, but it would be effectively back testing a lot of the prior resistance levels. You can see clear, we have this 50 to 55 cent level resistance, 50 to 55 cent resistance, 50 to 55 cents resistance, over and over again. So if we were to break out of this pattern, that would be the natural place to anticipate XRP to go, 51 cents. Yep, just got to take what the market gives us this time and see how this plays out. But what is most important about all of this is know that we are still so early in what's coming. You know, we're so early, and March could be a very, very magical month for XRP, specifically March and April. And I'll talk about that, a little bit more as we go. But for now, we know that we are in more de-risking mode for Bitcoin. We're in more de-risking mode for ETH, and we're still in accumulation mode for XRP. We're still in accumulation mode on a lot of altcoins. So this is a good time to pivot over and get into the altcoin section. But really quickly, I need to take a sip of water. All right. Now, we will be getting into Hedera. Got a lot of altcoins to go through. Let's see what's going on. All right, so H-bar has effectively broken out of this resistance line that we were talking about, that we were tracking for the last couple, pretty much all year, actually. And we got rejected here in February, again in August with lower highs, and then again in November, lower highs. And now, since we've broken this high, this is a very bullish, it's anticipating bullish structure moving forward. Now, what does that mean? That means in the macro, in the short term, if Bitcoin was to get rejected and come back to 30K, this thing will come back to 5 cents. Okay, so there's plenty of more opportunities, kind of where I'm going with this. Now, another thing I'm seeing is a clear support trend line. I know this makes charts a little messy, but we have 3 clean touch points. We have one in January at the beginning of the year, one in June, and again in October. Let me change the color of this. Let's go with blue. All right. So if we were to have the pullback, I like how April aligns with that level on the outside of this trend line. That could definitely be something to consider for positioning yourself in this project at extreme low, oversold territory. Entertaining it going lower than 4 cents is possible, and the reason why is because the way that most projects reacted to the C19 crash. I'm not saying that we're going to have a repeat of that crash, but you got to remember, if Bitcoin has a 40% correction, that this could lead to 60, 70, 80% corrections for some of these altcoins, depending on where they are at in their cycles. So a good example would be if Bitcoin was to come down to 27,000, I think Solana will have a full 80% correction from top to bottom, maybe 75%. Okay. I don't want to get so specific here, but you see, like that's not that's not going to feel like a bull run anymore, you know, and that's kind of what we're up against. Why is it likely to have such a big correction? Because it's already done so well. A thing like XRP it would be unlikely for XRP to have a 75% correction right now because it has not gained as much. It's all kind of in a balancing act right now until we get to the Bitcoin halving. All right. We're not there yet. So I like anything right now that is trading below the 382. That's still an opportunistic territory for me. It has been a little bit bullish lately for every altcoin since the last solar eclipse. So I'm not like FOMOing in right now. I'm chilling because I know we still have a lot of time to go. But in the meantime, this is looking like a very good structure because we have low, we have higher low, and we just broke the first high, lower high here. This could be a breakout of what would be a more bearish triangle, but we know that you can't lose much more than 95%. So this would take you into around this territory here. I believe about 17 cents. It doesn't need to be the cleanest measured move. That's not what this is about. If it aligns with some of our horizontal levels, that's what matters. And you could see right there about 16 cents to 19 cents in that range would make a ton of sense for a automatic rally. Now, because H-bar has the opportunity to go up to these levels, we could have that happen by March. We could have that happen by March, by April even. We got to see how this market opens up into this new year across the board. But still, even if it was to go up to these levels, it could have a correction coming all the way back to the 236. So when looking at horizontal analysis, I really like this 236. It tells me a 7-cent H-bar is likely if we were to get a larger correction. That would be a buying opportunity, and a de-risking opportunity would be any moves into the 18, 19-cent territory. We would have to check back in with RSI when that time comes. And we do have a effective breakout of this resistance line that was in play pretty much the whole year. Yeah, literally a full year. So that looks really nice. And then in the future, I would say probably by the next time we check in on this leading into March, we should be looking pretty good on H-bar. We should have a lot more structure. The reason why I have to kind of move on from H-bar right now is because we don't have enough data. We only have to 2019. We have this huge sell-off over here all around the C19 event. There's really no chart history. And this is not the best looking chart on earth. This is one of those plays for me that's venture capital that I'm just looking to have because of the ISO 222 compliance deal. And because of some of the awareness that I have about the technology, etc. I also like the Saturnian element to this symbolism. Just a side note on it. But yeah, we'll check back in on this one on the next What I'm Investing in podcast. Let's go over to Polygon. Matic. Now, Matic has a very nice prior bull run where we broke out, had about 30,000% gains or something. Yeah. From like the C19 crash, 30,000%. Unbelievable. Very sideways, and then it popped. And then now we've actually been becoming a little more mature in this pattern. I have a fib pulled from this current all-time high down to the swing low, and we're trading essentially in the center of it all, right there at the 0.5 fib. And if you look, we are breaking out of a huge triangle structure. We can see this has already had an automatic rally. Okay, I want you to take note of that because on the last chart, H bar did not have an automatic rally. We're kind of moving into one. But with this, we've already had one all the way back in February of this year. Last year. So we have buying climax, selling climax, automatic rally. We've already had our spring event that's over, which makes me very confident. The fact that we just broke out of this is that it's now moving into what's called an SOS. So I wanted to position myself before we moved into the SOS because after that, the backup phase is typically higher prices than where we're at now. We also had this clean W breakout too. We're sort of back testing right now. I would love for us to get more back testing on this outside trend line. I do think there's a kickback possible. What a kickback means is we can break back into a pattern. I really don't give a shit. If it was to, that would be a huge accumulation opportunity for me. Let's just say if it was to come all the way back to this 236 again, I still feel very confident in the future of this play. So the more the merrier. I'm going to zoom this out. But yeah, when it comes to us having an SOS, it's only confirmed if we break above the automatic rally. We're not there yet. So a lot can happen between then and where we are now. We could absolutely just have a move up to here, like $1.20, keel over, have a huge sell-off to 50 cents, maybe even come back down to this support right here at exactly 50 cents, and then engage into the SOS. We're doing a lot of these moves a little bit too early. So that's what's elusive about it all. You want to think of the spacing, and given where this had where it had its bull run top versus its sell-off versus its automatic rally and kind of how it's been structured since, I would be surprised if we were to see Matic break above the current automatic rally now. It would make more sense to me to happen into the fall time of next year. So yeah, still a lot of time to accumulate on this. I love this sort of chart. It's very easy to navigate and makes investing a little bit easier. We're going to go over to Chainlink. Chainlink is a good example of something that I am not putting any new money in, but the last time I invested in Link was February of this year. It's about 10 months ago. I was buying Link at $7.50-ish, and this play is up about 100%, so it's a good play on the year. But I do not intend to de-risk this, since at the end of the day, it's just venture capital to me. So wherever it's at now, if it goes up to a little bit more, whatever, the only way I would make any play on this right now is if I was buying more. But I want to have as much Link as possible for this next bull run. Great resistance that it broke out of, the way that it broke out of this 500-day horizontal trading range, very, very low volume, low volatility horizontal trading range. Boom, busted out of this 236. And once it got above the 382, this is confirmed automatic rally. So now we can see it's pulsing a lot, where we got a high, higher high, higher high, all around this 0.5 fib. Who knows if it's going to make it into this $20 area around this golden pocket? It might, like Solana did, where Solana got perfectly to the 786 and then rejected. That could be in the cards. But for me, yeah, I don't want to de-risk this right now. I'd rather just hold. I don't want to get so fancy. But yeah, so I love this opportunity in Link because I have some past data to work with too. I'm aware of the partnerships, Microsoft, and all sorts of other shit they're up to. Again, I don't support blockchain. I am here to invest in it so that I could take my profits out and then invest those profits into what serves my purpose. And that has to do with much more than blockchain. Like, I am here to leverage on it at best. I have no worship or fascination with this stuff. It's just charts to me. It's opportunities. I learn as much that I it's like Pareto's principle. I learn the 20% of the most important stuff so that I can become literate in the other 80%. I don't waste my prana on more than that. And if you're somebody who's interested in all the other bells and whistles and studying white papers and stuff like that, there's nothing wrong with that. There's nothing wrong with that. I want to be very clear here. you would be very valuable to the community, and you would be very valuable to me, actually, because you have a skill in something that I'm not attracted to, and that would round out parts where I might be missing. I admit that. But I didn't need any of that stuff to get to where I am today. And I've been making some incredible plays on projects that are very difficult to be profitable in, such as XRP. So that was dodging narratives and dodging, fake news and dodging people's conspiracy theories and all sorts of shit. Just turning off all the static and just looking at the charts and trading it effectively. Still been extremely profitable in that project. And that's something that I could look back on and say that I know my intuition was keeping me where I needed to be and away from the stuff that I didn't need to get involved in. But if you're somebody who's a developer and you're interested in writing code and all of that, then great, then of course that would be that would be in your circle of competence. And that would be stuff that you can bring to the community that could be extremely helpful to all of us. So I want to be clear here, I have no judgment towards it. It's not my cup of tea. Getting back to this chain link play, I've kind of talked enough about where I feel in regards to if we were to have another pulse to the upside. But as of now, we're just ranging in the middle, and it would make sense to me, guys, to see a retest below 10. That would not be weird. It would make sense to me that this completion of an AR of the automatic rally comes back to below 10 again. And I do think that would be a good opportunity to accumulate some last minute chain link. So I will be setting buy orders, but I have no plan to de-risk it. And my buy order range would probably be somewhere between 7 and I would say 7 and 850, because we have so many rejections here at 950 in the beginning, but then we see that it cut a little bit deeper right at the 236. I mean, it's unbelievable how that level was getting rejected over and over and over again. You could see from here, it's 240 days of rejections at 850. And then once it broke out, it just blasted through those levels. So it does feel weird to me it would feel weird to me to not have a retest of that level. So yeah, 750 to 850 would be a great reaccumulation range. Okay, now we're getting back to here, Cardano. All right, Cardano, you could also see here we had a falling resistance line coiled up a lot around it in November and then just blasted through, and then lately have been getting rejections at the 382. So I can't call this an automatic rally just yet, but for the fact that we had almost 600 days of resistance and then we finally broke through, that's an automatic rally. Like in Wyckoff realm, in true Wyckoff, you would call this an AR. The reason why I like the 382 as my level on a logarithmic scale using the log setting on the fibs is because I'm a crypto analyst primarily, and I need to clearly delineate, what's the authentic Wyckoff and what's the modified Wyckoff. And if this stuff is interesting to you guys, that's going to make my crypto mastermind course incredibly powerful for you if you're a beginner and you don't know a lot of this, or if you're interested as a more intermediate level, stepping up your game and becoming more advanced. I have that advanced trading course. Whether you're interested in actively trading or just swing trading, like becoming a better investor, that would still actually be a good course for you. If you have some basic TA knowledge. Because you're going to see the way I use Wyckoff method, we have these high quality PDF files of all the accumulation, distribution, reaccumulation, and redistribution charts. You could print those out and you could paper trade against those. And that makes people incredible when they look back at like 3 months of doing that versus the last 3 months of not doing that. I've seen some pretty cool data from people showing how it's been a game changer. And then we have some people that are just all clicks and they're like a professional trader within a month or so. So of course, when you're playing with real money, you got to be careful. You got to be careful with leverage, have proper risk management in place. But that advanced trading course goes over all of that. So yeah, this is a technical AR, but it wouldn't be AR in my eyes. Also, the fact that we're below this key level of 79 cents, where we see this little test on the downside it was like a short-term support before we had a bull trap. And then once it broke, this initiated just this slow, arduous sell-off. So I really like this 78 79-cent level. I think that's where we'll gravitate up to, and then probably a rejection from there. That would clear the 382. That would get us into the 0.5 fib, and technically we would want to see some trading between 79 cents and $1.03. So in plain English, I do kind of feel that the AR in this case has potential to make it up to the 0.5 fib. But if it's stalled out right now, that would not be weird either. We've seen this in the past too. And we do have a prior cycle on Cardano, buying climax, selling climax, really lackadaisical automatic rally, and then the C19 crash with a clean spring, followed by your SOS, a very nice backup phase. Some backup phases are very clean. They almost look like a cup and handle. And then this like couple of weeks of your last chance before it goes parabolic. We're only about halfway there. So yeah, this is definitely an exciting phase for Cardano, but I do suspect we have a pullback across the board to consider. And this 236 would be on my radar for buying opportunities. Let's get into Theta. Kind of do Theta and T Fuel together. All right, so Theta is now finally breaking out above this 236. A little bit too fast, too soon. This has been a really slow play, but you got to remember back in the last bull run, this thing did incredible, easily 20,000% off of this horizontal level. And it had a very parabolic style bull run. Since it's sold off a lot, given a lot of its gains back, and this is a venture capital play. This is something that's like a Hail Mary pass. You know, we don't know what's the future here of this particular project, but we all can agree on the future of streaming and blockchain being tied to streaming. That's coming to a theater near you. It's already a thing with companies such as Twitch, but you know what I mean. So specifically to blockchain, I think Theta is the category winner to consider that has this type of chart, past performance, and the opportunity. So yeah, that's kind of my investment thesis on the Theta play, and the idea of getting T Fuel is just to balance that out. So to set the tone here, we are still well below the 382. This automatic rally would make sense to come into about $3 to $4, and right now we're only about $1. And I do suspect there's an opportunity for us to pull back again to 85 cents. If we were to, that would be that would be a structural and technical thing, considering we just broke out of a 460-day resistance line, this red line right here. And we've back tested around it enough to confirm that it's done, but I would like to see a little bit more trading there. I know that kind of breaks some people's hearts, but remember, this is at day 600 of this horizontal range, and most things are breaking out on day like 500. This did effectively break out here, and we could confirm because it's broken out above the February 2020 levels too, and even higher than November. So if it can clear these August 22 highs of $1.70, I would get very, very bullish on Theta, even if it was to come back down lower. Just because we would finally be breaking all of this bearish structure, and this broadening falling wedge pattern would be in the past. We'd be moving on. And looking at this opportunity now, getting back to the 888 is about 700, 800%. To get to the prior all-time high is looking at 1,100% from where we're at. So as a venture capital play, if we're going to make it anywhere near the 1618, and I'm not going to entertain that, but I'll put us halfway through. I'll say $40, even lower than halfway through, if that was what the next move was to be on Theta. Yeah, we're talking about 3,000%. And I've entertained this idea of 2,500% on average for a lot of venture capital plays. So yeah, I mean, I'm not even saying that this huge 130 is going to happen. Technically, that's the kind of stuff that does happen. But in that event, getting $1 Theta puts us in a very good position. It'd be like getting into, and I'm not sure if ETH ever went this low, but I think ETH went to maybe $7 or $6. It'd be like getting in on ETH that low, you know, before it went on to go to 4,000 eventually. That kind of stuff's possible in the future, because we have a lot of shit coins that are circling around, and a lot of that stuff needs to get regulated out. Stuff with absolutely no use case. Like, it's not even being a used technology. That stuff has to go. And when it goes, it's going to flood into the stuff that is being a used technology and does have a development team that is building on it, etc. And T-Fuel, like I said, it's just the governance play. I like another thing to consider is the flame symbolism that we got for T-Fuel. I was talking about the Year of the Dragon. We're moving into the Year of the Dragon. And then this white trend line has been on my radar because we've gotten a couple rejections here. We got a clean test right there, break below, rejection there. And you can see we rode on this trend line for about 200 days almost before going parabolic. So this white trend line that's going across the screen is absolutely important for T-Fuel. And once we clear that and effectively clear this double rejection level at 8 cents, I think this thing is going to start getting very bullish again. So right now we're in the opportunity area. Another thing is, this looks kind of weird, but it's just an array of 3 separate trend lines that all had their apex right at this point that we've effectively backtested and since we've bounced. So I think that this sell-off is over. I think that this might be the lowest T-Fuel gets, is at this 3 cent range. But if, we do have to be open-minded on a coin like this. This is not a typical project. This is riding the coattails of Theta. So if Theta loses 10%, this thing could lose 30. But nothing wrong with getting a little bit of it. So if I had a portfolio with 2.5% Theta, I would put 1.5% or 1% T-Fuel. That's kind of the idea here. All right, let's go to VeChain. We'll do VeChain and VeTho together. So VeChain has been looking pretty damn good. It has broken out of this horizontal trading range that was 570, almost 580 days. We cleared these rejection points here, and now we're trading on top of it. So that's looking very bullish. We also have a prior cycle to consider with VeChain, and this marks the bottom. Now we're moving into automatic rally essence. We'll confirm that when we start trading above 4 cents. And I like the zone that I've mapped out up here because it's right below the 618. I think we saw Kusama do this where it came up to the 618, got rejected and keeled over. Let me confirm that. Sorry, it's avalanche. Exactly. So avalanche is what I meant. You see right here, this parabolic advance straight to the 618 and then rejection. Yeah, that's the kind of stuff that happens on some of this stuff. And you want to look at the momentum it has. VeChain is a way healthier breakout so far. That Kusama breakout was too quick, too soon. And the fact that it got rejected right at that 618 level at the bottom of the golden pocket, it's not weird. It's a de-risk level. So yeah, like we're just getting going on the excitement for VeChain. This is one of those projects that I've been a long-term investor of and definitely looking for a bullish end of 2024 into 2025 season. And this is one of those projects that I'm going to make sure that I have my bags packed. Considering where we're at now and where this potentially is going, even if we only made it to $1 off of where we're at now, looking at about 3,000%. So again, very similar to the idea on what I just shared moments ago with, I believe, Theta. So I really like that 2,500 number, 2,500% on these venture capital plays. Most of them, when I'm measuring out, that's very comfortable. And then it gives you all this room to the upside between that level and more price discovery to the technical level of the 1618. Obviously you always go with technical analysis. You don't just make numbers up off the top of your head, but so right here, you could see what happened. When I pull from launch price down to the C19 crash, we did get effectively above that 618. How many cycles can you do that though? Not everything's like Bitcoin or Dogecoin. So, I mean, if this really was to go to that 1618, we're talking about 5,000%. It's a nice number. It's a nice number, especially as we're like so many cycles deep into crypto now. These huge bull runs of 20, 30, 40,000%. I don't know if they're going to continue to last forever. You got to be cognizant of that. You can't just always be like Moon Boy. That's going to prevent you from taking action, actually. So VeChain's looking good. If we were to have a pullback, I would entertain this trend line that has been in play for a little bit. But of course, that 236 is big. And in the meantime, a completion of AR somewhere in this zone. We're about halfway between both of those moves. So wherever it goes, if it has a pullback, I will be accumulating. Let's quickly get through VTHO. Same thing. Just copy the analysis I just shared. It's the same stuff. Also have a lot of data from the past. And with this one, you're looking at a retest of about 1,000% of the prior all-time highs from where it's at now. So it's effectively breaking into automatic rally. We could even see this little touch slightly above the 382, showing that it's in that bullish momentum and heading higher. Looking awesome. This looks really, really, really solid. In the next podcast that I do, I'll probably keep out VTHO and T-Fuel unless I need to go over them, just to shorten the episode. Let's go to Aave. I don't know if I've done analysis on this, at least not lately. So Aave is looking very much like the Chainlink chart to me. This sort of breakout. It was 500, almost 600 days. We've finally broken out. We've finally tested the 382. So we're moving into that, like I said, that automatic rally essence. And then we have this low level at the bottom of about $50. If we are to have a more extreme pullback, that would be where you would look to. And in the meantime, the 236 needs to be on our radar because this hasn't been like full-fledged bullish release just yet. We have even a 20% correction would get us back to the 236. So that would be a buying opportunity. I would personally not be buying any Aave above $100. But when we zoom out, we can see that the proof is in the pudding. This thing had one of the craziest bull runs of all time back in 2021. Easily 100,000% if you were to measure off these bottoms, and then 80,000% off this horizontal level. Pretty mind-blowing shit. Yeah. And then you see this kind of double bull run essence where we topped out, had a 70% correction, and then kept it going. This is what I'm talking about, like with the Solana chart. I was talking about potential upcoming 70% correction during a bull run and how that's normal. It's very normal. I know it seems weird, but it's normal. In a recovery phase, this was beautiful too because you look, it broke all-time highs. Then the backup was perfectly testing within all-time highs before it made one more impulse. And even that was an additional 2,300%. So yeah, incredible. Not a coin to sleep on. But I would not be buying over 100. I would wait till this gets back personally because I've already accumulated. And if it wants to initiate full AR vibes, we'll see the timing of it all. One thing that might clear up some confusion for people who ask is, Waters, what if these ARs come in like March, before April, before the solar eclipse? What will you do? Well, then I'll reassess. That's why I want to do this next part 3 of this style of podcast before the next lunar eclipse. Because, of course, we want to reassess whatever the market gives us. Okay, we're moving on to Cosmos. Atom. All right, so Atom, I see I've mapped out this Wyckoff structure, and we do have buying climax, selling climax. AR has already been completed. We've now effectively had our spring, and what's next is the test. And this AR, any trading above it would be indicating an SOS, and I've talked about this with a couple other projects, so you get the picture now. If we're going to start trading in the golden pocket next, that would be get ready for this to get very bullish. And I do feel like this is one of those projects that can make it up to the 1618, the golden ratio, because it did not have really a prior, it didn't really have such an incredible bull run comparatively to a lot of other stuff. I mean, it did do very well. There's no denying 1,800% or 2,000%. But I do think there's going to be a little bit more opportunity on this particular project for the next cycle. I think that the 1618 would even be able to be breached in this case. We'll see. And we'll get to that at a later date, of course. But in the meantime, I really like this rejection at the 382. It's giving signs of, that it's coiling up. Still ready to explode, and when it does, it's going to go straight to this golden pocket area. So these lower highs that we have right now, building a lot of strength. I don't think too much retail is going to be interested in this one, so that's another reason why I'm kind of looking at it. I try to be in some of the projects that retail isn't too focused on, and I can be a little bit more confident in the percentage moves. It's a lot more difficult when a lot of retail's in it, just jumping into the trend, you know? I also don't like trendy shit, so I try to stay away from being in stuff that's just like these meme coins. Although that is a game that some people play with a lot of success. It's just not my way. I have other things to build and create. I don't want to sit there all day looking for the next 100x that goes up and then crashes to zero. It's boring to me. All right, so yeah, this is looking pretty good overall in the chart structure. We have completed an AR already, so end of spring. So this is probably as low as this chart gets, this $6 level. Anything that's going to start trading below 10 is an opportunity, and we'd want to look to this 236 level as your buying range. Considering the horizontal level, though, 6 to 7 is not out of the cards. If this is going to have a deeper pullback, that'd be your opportunity. We're looking at Polkadot. Yeah, the next time I do this, I'm probably going to save not having any decoding stuff in the beginning so that we don't go too long, because it was important as the New Year's Eve special to do it this way, but next time it'll just be me reviewing the charts. I think more people will appreciate the time too. So this Polkadot chart, clean resistance that we broke out and back tested. I love this. Getting above this 236 was confirming a break above the September highs, the yearly highs, and now we're effectively closing off the year at highs. So this is looking really good. We also went lower. So this was what we call a bear trap. Low, higher low, lower low, lower low, and then once we sprung out and broke this lower high, that was a huge sign that this was a bear trap and that this is also your bottom. Now it's moving into an automatic rally. Holding these levels would be nice. I don't know if this thing could sell off too much more because it's already given back almost all of its gains since it's released, since it was launched, excuse me. And now it's kind of doing what all the other altcoins are doing. It's catching up to the rest. And look for this 382 because once we break above that, there's thin air until $20. So that'll be a nice move. And I suspect a lot of altcoins that I've gone over today are going to move in sequence with each other into this 702 pocket would be kind of the upper level to expect on Polkadot. Okay. Not like the I think it was Kusama. I don't know. Whichever one turned around right at the 618, that was because it was just going straight line, really hardcore, too quick. And it already had an amazing bull run in the past. So let's look at where we're measuring off of this level to prior all-time high. So yeah, about 500%. This is definitely one of those that I would entertain going to the 1618 in the next cycle, looking at about 3,500% or getting up to about $300. And we'll decode this probably at the end of next year. I'll go ahead and I'll do decodes again on all of these. That might be fun, but I can't do that anytime soon. Anyways, clean breakout of resistance. This is looking like it's getting bullish again. Zilliqa. Okay. Zilliqa, very opportunistic right now because it is trading in the same levels as it was, as it was back here in June of 2020 when we had the backup phase for Zilliqa before it finished off the alt season. And we've been holding far above the C19 crash. So this is one of the most clean supports I've seen on a altcoin going all the way back to 2018. Now that's not the greatest looking chart on earth, but I do like how it's come back to that level and held. You could see it here. Getting back above it, holding, parabolic, returning right back to it. Double bottom, and then now we're breaking out again. So we need to look for this level to break at 3 cents to confirm this bottom. Until this breaks, we can't be too confident, but because we have data that goes all the way back into 2018, that's feeling pretty good. Great. So yeah, I suspect we could have a pop up to this region about 3 to 4 cents if Bitcoin was to have one more move up. But until then, this one's really chilling in the really, really slow mover. Not a huge position in my portfolio. It's probably under 2%, but it's one of those that I do, I've been a long time follower of and feel pretty good that we'll have another move up. I got a crazy trade back here in April 2022. I remember that day. I'll never forget it because it was one of the most craziest trades I've ever executed on a limit order that was set perfectly to the level. I remember sharing screen caps of that too with the community back then. It was wild to get this wick on this random breakout, which ended up being, huge fake out. So in the next cycle, we'll have to see. But if I was to label this cycle by cycle, we would have a triple top incoming, and that's very bullish, and that would definitely signal a move up to this 1618, which is about $1.50. So that's a great opportunity, 4,000 to 5,000% potentially. So we'll follow that up, but for now it's just ranging at the downside levels that it was a year ago. Not a whole lot of progress on that. IOTA, we are in the test. Great. So this is a very long-term chart. We're looking at the weekly right now, and you could see buying climax, selling climax, automatic rally. We finished off the spring, which is great because that means that's about as low as IOTA should ever get ever again. And we're just breaking out. The one thing to say, though, is this is not an impressive chart because look at where we're trading at in comparison to the C19 crash. Whilst Zilliqa was up about 700-800% from those levels, this thing is trading at the same levels as it was right before the C19 crash, and then right after. Got to watch myself. Anyways, so where we're at right now is only nice because we've extended a little above it. Let me show you. We've extended a little above it, and then we've back tested this 236, which was a rejection level that came in February. So this does feel like the end of a spring to me and the start of a test. And then what follows a test is a SOS. And that would be just the SOS territory is almost 800% above us. That's awesome. That's like a really big move to consider. So getting back to all-time highs, if you consider where we're at right now, that would be about 2,000%. So I like this IOTA play. It's a small position for me, but I'm going to keep on track with this. If we were to break below 13 cents, that would indicate that this was not the spring. But so far, I think I have this mapped out pretty well, and it's pretty accurate. And all the projects that had this automatic rally in the alt season and did not go into price discovery, which there was a handful, those are definitely the ones to pay attention to in the next cycle because they have more likelihood of ROI potential than the coins that had these crazy bull cycles. Well, yeah, it was good back then, but moving forward, I think the ROI potential is going to be in the stuff that did not break all-time highs. That's just like a intuitive feeling, though. And I will plan on accumulating a little bit more IOTA, HBAR, VeChain, Theta, if we get some pullbacks. Same thing for this coin here, Stellar Lumens. And this chart we've been following for a while now. Let me see what's going on. Okay, so it's a little bit noisy, but hang in there with me. We have this white trend line going on all the way in these key pivot points. You could see here it got very clean where we were just getting rejected for 160 days before dropping out. And then we got above it and back tested it. So I feel that this is the most important resistance and current support trend line that we have now. And the fact that we've broken out here, it's indicating to me that we're moving into the SOS phase of the Stellar Lumens chart, similar to the IOTA chart that we were just looking at. And by the way, you could just copy all the analysis that I did for IOTA because it's the same for this. It's pretty much identical. So that's kind of a good way of wrapping up today's video. If you feel good about the XRP play, though, don't get too crazy with the over diversifying and investing in all these other ISO coins because, it could complicate things for people. Think of it as venture capital. You want to look at Hedera, XDC, IOTA, Stellar Lumens, like those are venture capital plays. XRP is a venture capital play too, but with XRP, you have a lot of stuff to consider in the future implication, like where our whole economy is going, where this whole blockchain economy is headed. And that's the purpose of me getting slightly positioned in XLM and IOTA and Hedera. But my whole take on this is if XRP does well, all of these other things will do well, but I think XRP will do better. So it's not like I'm greedy. I'm just sharing why I'm not getting so crazy about building big positions and stuff like XLM and IOTA, for instance. But I'm going to leave it at that. This is almost 2 hours. I know a lot of you have parties to attend and fun things to do, and I was not even anticipating this actually being such a long podcast, but I appreciate every single one of you for tuning in today. If you made it all the way to the end, I'm really looking forward to launching this new decoding mastermind very soon. And I'm looking forward to the next podcast already, the first podcast of the year. And until then, appreciate and I'm wishing you all an amazing rest of your New Year's. Appreciate every single one of you. Much love.